Cool. So today we're going to go over all the main aspects of fundraising efficiently. So, one of the most important aspects of fundraising is the narrative that you're telling investors. So, it's really important to not overcomplicate the main premise, right? Is like usually technical founders especially they use big words and they kind of use keywords that can be confusing, and like when you're speaking to an investor and when you're writing your tagline and developing the first couple slides of your deck, you really want to simplify what it is you do, how you're adding value to users or your clients if you're B2B or B2C. And you want it to be super simple to understand, especially on your web page, right? Sometimes you go to see a new project and you go on their website and you're just like, what is it that they actually do? The words on here don't make sense right off the bat. So, number one in building a narrative is don't overcomplicate it. Really refine the messaging so that people understand instantly the value you're adding. The next is don't be redundant, right? Like you don't want to be competing with a million other projects raising in the same sector, right? So it's like data, for instance. Clearly define what your value is if you're a data project, because VCs, they see data decks all day every day. It's really hard to raise if that's your narrative. So if you are in data, try to create a narrative that uses different terminology to kind of separate you from all the other projects pitching a data narrative. And the same could go for AI or compute. These are very common startups these days. So you kind of want to stand out and not make the investor think, not another ZK deck or not another AI data deck, right? So narrative is what will make or break your fundraising experience. So that's why I put it on the first slide. All right. So creating a data room. Right here, there's a little snapshot of what this kind of looks like in Notion. The difference between a data room and a deck is kind of a concise visual representation to show investors what it is you do and how you do it. Whereas a data room is all the specifics from the legal entity, right? So you're going to want to have your entity certificate showing the investor that you are a real company. If you don't have an entity, one of the fastest jurisdictions to get an entity is Panama. So you can always move jurisdictions later, right? If you're going to fundraise and you're trying to be quick, get a Panama jurisdiction entity and sign a SAFE or SAFT with that, and then you can always change jurisdictions or change the entity later and then sign an agreement between the Panama entity and the new entity that's more beneficial for launching a token. And if you're planning on launching a token, the common structure, right, is a BVI operating entity and a Cayman foundation. White paper, right? You're going to want to have your white paper in the data room detailing every technical aspect of your protocol. This is the thesis, right? You can think of it as your graduate thesis in college. This is the technical paper that VCs are going to have their analysts dig into, and so you're going to want to make sure that that's nice and buttoned up. Uh, Other things that's important to have in a data room would be a business plan. And you might be thinking like, okay, like data room, deck, business plan, there's going to be some overlap, right? But oftentimes VCs are lazy. They're not going to really pay super close attention to the deck. They might skim through it. You really got to capture their attention in the first few slides, which is why it's important to have a super simplified narrative that so they immediately understand what you're doing. Whereas the deck is visual, you want to show them the product and not have too much text or words. The business plan is really like all the words, right? It's like a high level overview of what it is and how you plan to execute your company and project. So typically you'll include a go-to-market overview, right? This is just a summary of your general go-to-market strategy. When you need to have a separate go-to-market strategy document in your data room, which details your 30-day, 60-day, 90-day plan, your KPIs, how you are going to amplify, how you're going to acquire users. For structure, you can easily use ChatGPT to find a traditional business plan and go-to-market structure, and then just filling it in and making it more authentic, changing the words so that it's not super drawn out. Usually when I'm writing a document, especially one for an investor, I try to limit the amount of words in a sentence, right? You want to like get your point across simply and in a genuine way so they don't have trouble uh, staying awake while they're reading it, right? You want them to keep paying attention and keep reading. And if you put too many words in there and you make it long and lengthy and trying to make it sound too smart, that's going to lose their attention, right? So the business plan is really important as a high level overview. And then the go to market strategy is also important in showing them how you plan to launch and kind of the timeline for your execution strategy as far as going to launch. So the other thing I wanted to talk about is financials. So some of you might be raising pre-seed or seed, right? And you might not have any financials yet, but typically in a data room, you have revenue projections, right? So you're going to want to show investors how you plan to monetize, right? Like if you have a 5-year revenue and growth projections featuring every project. So conceptualizing how you plan to monetize is a very important concept that you want to convey to your investors. We're not in like the old days where they're just throwing money at projects anymore, because there's so many projects. They want to see how you plan to make money. And if you've already made some money, then even better for you, right? So showing them if you've made any money or showing them how you plan to make money is critical. One I kind of glossed over in the beginning was product and market landscape. So telling them the tech stack, the competitor analysis, right? Who are the major players in your sector and what's your moat? How do you differentiate from your competitors? So detailing product core features, super important, right? And I like to show that visually, like this this data room here on the right is a little bit more there's nothing wrong with adding pictures in these pages showcasing your product, right? Is like just make sure that if you're showing something visually that it looks really nice. Like the most important thing you can do when going to raise is have a quality designer. You do not want to be showing an investor an ugly looking deck or an ugly looking UI. Like that is the easiest way to make sure that you get zero money, right? Is you're buying it. Usually you link your investor deck, and we'll be going over the investor deck next. But the other one, the last one is team, right? You want to have a section on your team and all of your guys's backgrounds. So depending on what it is you're doing, right? What kind of project you are, you want to make sure that you're showcasing a team that has experience in that sector, because most VCs, especially in pre-seed and seed round, they just like they don't know you and they want to invest in teams and and products that they know and understand. So since they don't know your team, right? You want to make them feel comfortable. They're going to be investing in that over everything else. When I worked at Geek Cartel, our GP used to always say we invest in teams, right? We can make the product better. Like VCs will help incubate, they'll help deliver like on the code and whatever they need to, the marketing to make a project a success. What they're looking for is solid teams. So when you're presenting a team to an investor, do yourself a favor and I guess make sure that there's different people in different roles that all have to do with the category or sector that your project is in. All right, so deck creation. I kind of already spoke a little bit on like the fact that VCs can be lazy, right? They're being inundated with decks. They get sent hundreds of decks a week and they have a lot of calls. There's not a whole lot of time for them to really do proper due diligence. They're usually having analysts and research analysts do due diligence, but to get your deck in front of an analyst and to get on that first introductory call, you really have to grab their attention in the first two slides, right? It's important to have all these different slides listed here, but um, I guess the first two slides are the most important because if an investor clicks through and immediately doesn't understand what you're doing or isn't attracted by the pitch, he's just gonna gloss over the remaining slides and he's not gonna pay attention. You're gonna have trouble getting him on an introductory call, and you really only have one chance to present yourself to a VC because they will ghost. Unfortunately, it sucks, but they're just too busy to reply sometimes. And I respect the VCs that do give honest feedback and reply to projects, but most of them don't. So make sure you're grabbing their attention. Make sure you have the visuals of the products because you don't want to have too much reading. And a deck should not have too much reading. That's what the data room and the business plan and the go-to-market strategy are for. The deck should be all visuals. So I've included right here a slide I really like and in a deck because it shows, right? Like this is a yield network distribution layer, right? So right now, one of the big metas in blockchain is vaults, right? You've got all sorts of vaults, infra providers, and vault curators. So people like Euler and Concrete, Midas, Veda, uh, they're all running these vault infrastructures that hold hundreds of millions of dollars. And there's hedge fund curators who manage the strategies and return the yield back to the depositor. So this project here is a distribution layer. They sit on top of the vaults. They don't handle the money or any of the risk, but they route liquidity, right? Because there's an issue between LPs looking for blue chip yield and projects trying to attract liquidity. Every project is fighting for liquidity, fighting for their lives, right? And so this product, it sits on top of vaults and it sits on top of core primitives such as RWA and DeFi projects that source the yield. And then they just route liquidity through LPs. And the other big thing they do is attribution. So where's the money coming from? Is this mercenary capital? Is it sticky capital? And then they have an SDK where they can plug and embed those yield opportunities into wallets and fintechs apps. So like here, there's some words, there's some text, but really you're getting the visual of what it is this project's doing. And that a picture says 1,000 words is the old motto, right? It's the old saying, and it's true. So in the first two slides, you want the investor to click on this, or when they come to the website and see this, so they understand the opportunity, right? What is the market opportunity. How are they going to benefit from investing in your project? Who's going to benefit from your project and why? So you usually, in the first slide, you declare a problem, right? The problem is that LPs have a hard time managing yield opportunities. They're fragmented. They don't know if they have trouble assessing the risk, finding blue chip yield, finding private deals. They want it to be easier for themselves, right? And on the flip side, protocols are fighting for TVL and liquidity, and they have a hard time sourcing new liquidity and finding liquidity that is sticky and non-mercenary, right? And then the third side is wallets and fintech apps. They have to waste weeks of their lives adding new yield strategies. And by the time they add them, the APR is 1% because the cap is reached. And so this is the problem. And the solution is yield network. And you can see it in this slide. It's connecting LPs and projects and then distributing that yield into distribution channels such as wallets and fintech apps. So this is kind of what a good deck would look like, right? It would really show the investor what it is that they're buying into, what the problem is, and how your project solves the problem. And then the next slide would be the product itself. What is the tech stack, right? How have you orchestrated this tech stack? And then what is the economy, right? Like, how does your economy work? Your tokenomics, what is your token utility? Investors are going to want to see that you're not just launching a token for no reason, that it's an integral part of your project. And they're going to want to know how you're going to drive demand and value accrual back to your token, right? So maybe it's fees generated from user activity are going to go back to the token holder, or there's going to be a burn mechanism. You want to show them that there's going to be less inflation and more value accrual. And that's part of what you're going to loop into your go-to-market strategy, right? It's like, okay, activity within the protocol is going to drive value to the token. And this is how we're going to get users, right? So the slide after that would be distribution, right? How are you going to get this product into into the hands of users? And that's what you're going to include in your go-to-market strategy and a little bit in your business plan. We already talked about moat a little bit, but you're going to want to have a moat slide visualizing who the major players are, who are the top projects in your sector, and why is your product superior to the other top 1, 2, 3 projects in the space doing the exact same thing as you. Super important. You want to be able to explain to the investor your competitive edge, and the deck is really important for when you're on that first introductory call, right? This is what you're going to be pitching off of to an investor. So the slide after moat, that's really important. So after you've shown them kind of the differentiators, you're going to want to show them the traction that you already have. And traction is super important. You want to include this in your blurb. So typically when you're sending over your deck, you write a short blurb detailing kind of who you are. You want to include some traction, some stats. What have you already accomplished? Who are your existing partners? You're going to want to find partners with already significant branding. And, if they're tier 2, tier 1 brand names, that's great, right? If you're working with a foundation, if you're being incubated by a foundation, that's important as well, right? Because sometimes if you're having trouble getting an investor to invest in you, you're having trouble getting them over the fence, what you can do is you can strike up a deal with a foundation to be incubated, or you can do a convertible grant, which essentially allows you to say that this foundation is on your cap table. And then once you have that, then it's much easier to raise capital or to find a lead investor, because a lot of investors, they're not going to give you a check unless you have a lead, right? So setting the lead and the valuation is critical. So it's typically really hard to raise pre-seed, right? Especially it's like investors don't know who you are, you don't have a product, like it's hard, right? Like they don't know you and they can't test the project. So it's like typically always better to raise once you have a product, to start at a seed round and to show some traction. If you're having trouble raising, try to reach out to a foundation, because these foundations, they're all fighting each other for liquidity, for project launches, for big hype TGEs. And so they have grants to fund ecosystem development, right? So reach out to some foundations, try to get a big foundation on your traction slide. Then once you're in an ecosystem, you can reach out to projects that are big, that are on the ecosystem through the foundation. You can get those partnerships cooking, get them on your slide, and then try to get some user activity going, some revenue, to showcase what you've accomplished. And if you can do that, then you're gonna be more convincing. The investor is going to see, okay, these guys are cooking, right? They've got some big partnerships. They're being incubated. Their TGE is being incubated by a tier one foundation, and they've already got some users and some TVL commitments. They're working with some LPs. That's great. That's what you want. And then team slide, we already went over it. Usually you'll include your 4 or 5 core members. You're going to want to have a CTO, technical founder, on there with great experience. You're going to want a CEO, maybe with a prior exit, to showcase that uh, this founder has already been successful at starting a company. And then, business development, marketing, community. These are all aspects that foundations and investors are going to want to see. They're going to want to see the dedicated team and know what their background and experience is and why they'll be able to succeed. And then funding. The last slide is typically the ask. So you set the valuation, right? And usually a lead investor sets the valuation, but what you're going to be doing is you're going to be putting out an ask. So typically projects that are pre-token launch, they're doing a SAFE with a convertible SAF. So you start off selling 10% equity. If you're raising $3 million, and you're setting a valuation of $30 million for yourself. And how you set the valuation determines the course for your project in the future, right? So if you raise 3 million at a 30 million valuation for pre-seed, that's going to set up your next raise for Series A, Series B, Series C. Same with pre-seed. So if you raise at a lower valuation, you're going to have trouble raising at a higher valuation later. So it's kind of a chicken and egg situation where you want to offer VCs valuations that are appealing to them. The lower the better, but you don't want to go so low that you set yourself up for failure in the future. And I would say that raising pre-seed, you're definitely going to have to give a really low valuation because there's no product yet. So if you can avoid raising pre-seed, I definitely suggest it. It is absolutely grueling. Like getting no's, speaking to VCs, doing outreach for months, and then getting nothing is very disenfranchising. So if you can avoid raising pre-seed, I absolutely recommend it. Wait till you have an MVP. Wait till you have something to show them and some traction and metrics, and then go raise at a higher valuation. But make sure that the valuation you're raising at kind of matches the financials and the data room and your projected revenue, because like VCs aren't stupid. If you're showing financial projections that don't match up with your valuation, they're not going to take you seriously. And not every VC has to get the same valuation. You can negotiate with a lead investor by offering them a discounted valuation, right? So at Geek Cartel, right? They would sometimes get better valuations than other people, other VCs and investors in the rounds that they were involved in because they helped incubate and provide technical support. All the GPs and participants of the VC were technical nerds, right? That's why they're called Geek Cartel. So they would add value on the code incubation and architecture, on the business logic, on the marketing, and so they got better valuations. You can do that with a lead investor. You can say, hey, we'll give you a bit of a discount. We'll give you 40% of the round capacity, because usually VCs that are leading, they're going to want anywhere between 25 to 40% of the entire round. And then they set the valuation, and then the follow-on checks come in. And so definitely some VCs won't lead at all, while others only want to lead. But there's definitely far fewer VCs who lead than there are who just write follow-on checks. For a follow-on check writing fund, it's pretty easy for them. Once they see that a big brand VC is leading the round, they almost don't even have to really think, because they know all the VCs in the game. They know their track record, their portfolio companies. So if a good VC is leading the round, they don't even care about the deck. They're just gonna write you a small check and know that they're most likely in good hands, gonna make some returns. And I think, like, illustrating to the VC when you're raising on what the paths for an exit look like, like, show them visually. We have two potential paths for exit, right? We can go the M&A route, where we just build the business and then sell it, or we're going to launch a token. This is when we're planning to launch. These are the exchanges we're talking to, and these are the economics behind the token that are going to have positive price discovery. And our last slide. So this is all on outreach, right? So warm intros are going to be your best chance of having an introductory call. If you're just going through Crypto Rank, going to VC's websites and doing cold outreach, you're not going to hear back, most likely. There's like small percentage of you might hear back from one or two, but if you reach out to 50 cold VCs, you might only hear back from one. You might not hear back from any. So reach out to your friends in the space, go to conferences, go to investor focused side events, co-host events, and only do cold outreach as like a last resort. Because when you get that warm intro, the VC knows that you're a friend of a friend, and they're going to treat you with more respect. They're going to give you a little bit more time and energy, and they're not going to ghost you unless, they just decide they don't like your product. But even then, they'll typically tell you, hey, this just isn't right for our thesis. That's what you want as a warm intro, right? And then your lingo. How are you communicating in your first contact with them in the blurb? You want to make sure that your blurb is not super long. You want to keep it so that, like, if you're on your mobile phone in Telegram, you should be able to read your blurb without scrolling down. And you want to limit the amount of words, as we mentioned before, and showcase your traction and your stats, your achievements, but also explain what you're doing and who your backers are. So if you have existing backers or people on your equity table, you're going to want to highlight that. That's going to be beneficial to you. And then last but not least, like, creativity. Be creative on connecting with VCs and how you're propositioning them. They see this stuff 100 times a day. So I guess when you're contacting in the group chat, if you've already had an introductory call with them and you want to push things to the next steps, think about the message that you send them, the follow-up message, right? Don't just say, "Hey, would love to move to the next steps. Great connecting with you on that introductory call." Like, be creative. Try to prompt them with a question. Dig into their portfolio companies. What is their thesis, right? Don't just copy paste the same message to every VC. Look at what they've already invested in so that you know, like, these guys have invested in this ZK company or they've invested in lending protocols and different ecosystems, and then think, how does my product help their existing their existing portfolio companies? And then craft a tailored message. Say like, hey, like, I see you've got XYZ and your portfolio companies. I think we could be super synergistic with them. These are some these are the latest updates from last week. We're moving forward on partnerships with this project and this project, and we've just got a new LP who committed a soft commit of $5 million of TVL on launch, right? Or we just signed with this ecosystem or this exchange, right? So just like share stuff that's tailored to the specific VC with updates that are bullish, and also pictures. Like, include a picture in there, like create a new slide that they haven't seen before that's like shows them your modular stack or some new campaign that you're working on, right? If you have a new campaign cooking, show it to them visually in one slide, send them the picture with the updates and a crafted message that's completely tailored to their thesis and vision and how they invest. And you will see a much greater uptick in responses and you won't get ghosted. All right. That's it for my presentation, guys. I hope that was a little bit helpful, and I hope that you have much success in raising capital. If you have any questions, feel free to hop up on stage and ask, or you can ask in the chat.
That was great, Sam. Thank you very much. It was very interesting. Learned a lot today. I got a question
Thanks, Nathan.
myself regarding AI usage. I mean, how do you think like VCs see AI usage, like as a good thing or a bad thing?
I think that it's good and bad, right? Like, all VCs are very bullish on AI, right? They know that AI is going to revolutionize the way we function as a society, but it's also a played out buzzword, right? And projects are trying to be more appealing by just throwing AI into their tagline, into what they do. But oftentimes it's very basic, right? It's like just the smallest aspect of AI that just doesn't really do that much within the protocol. They're just using it to attract attention because they know that AI is the next big thing. So it's almost kind of cringy to say you're doing AI when you're pitching to an investor. Like, I wouldn't put that at the forefront unless you're a hardcore AI company. You're like doing your own large language model, or that is your whole business. I wouldn't even include AI in the pitch. So if you're not solely an AI company, don't include it in your pitch. Like, I mean, leave it in the fine print. Like, tell them on like the second call, like, or at the very end of the pitch, be like, yeah, oh yeah, hey, kind of in passing, yeah, we do this little like AI thing that really is cool that helps with the project. That's kind of my recommendation, because like, if a VC sees like that you're a predictions market, an AI predictions market, they're gonna kind of laugh, and they're gonna have trouble taking you seriously, because they're gonna be like, oh, this guy's just trying to sell me AI. Oh man, but they're a prediction market. So it's like they're gonna lose a little bit of respect. So I think like you got to be careful with how you throw that buzzword around, and that kind of goes back to the first slide of like choose your narrative well and don't be redundant. Don't do what everyone else is doing. Don't say what everyone else is saying. Um, you got to use language that is simple, that VCs understand that the value of your project, and that they don't think, oh man, it's just another AI. We've already got like 3 AI investments. We've already got 3 data investments or 3 compute investments. Like, you got to kind of separate yourself from the oversaturated sectors that are also raising with you.
Sounds great. Thanks. And I have another question, maybe more related to blockchain itself. That I understand, like lots of VCs, like basically buy a token. That's usually how they invest on a project. But what about projects that don't have a token, or how good or bad is not having a token in your project when pitching to VCs?
That's a really great question. Yeah, so typically most VCs want to invest in a token because it's an easier way for them to exit. And all VCs are here to make money. Some do it respectfully, some are more mercenary. You should know who you're working with, right? Don't plan to get involved with Polychain and think that they're going to be good guys when it comes to selling your token and making money for themselves, right? So first off, you want to be selective with who you work with. But also just know that VCs usually want a token because it's easier for them to exit, right? It's like if they're buying into equity, they have to wait essentially till you IPO, right? They're making money off the valuation going higher. So if they get it at a seed round at 10 million and your series A is 50 million, they've just made money, right? But they can't actualize those returns until your company goes public and they have shares. And so in this case, like some VCs, they'll respect you if you say, hey, we might do a token, but um, you know, we're thinking about it not at this time, right? We don't want to just throw a token out there that has no utility just for the sake of having one. I think VCs want to see founders that think more about their token utility and aren't just rushing and saying, "Oh, I've got a token." Like no one wants to be bullshitted on your token's utility. So, if you're going to have a token, make sure the economy is really sound and that it has value. Otherwise, I think VCs will respect more if you say, yeah, we're looking into doing a token, no promises. We will do a safe with a SAF convertible if we do launch a token, 1 to 1.5 token warrant. And but the other path that we're looking at is M&A. So if you're choosing like an M&A exit route, like a buyout, or if you're looking to go all the way public, you're probably going to want to make sure that your project is doing something not a lot of other people are doing, right? You want to be a first mover in this scenario because you're going to have a hard time getting bought out if there's 10 other projects like you. So typically it's better to have a token, but only if the token utility and value is there. So yeah, it goes both ways.
Awesome. Thanks. I have no more questions, but if anyone in the audience has any questions, just feel free to ask.
All right, guys. Well, thank you very much for participating. And you can always hit me up in the Conflux chat. I'm available. Just ping me. I'll see your message and get back to you. And if you have decks, right, if you're participating in the hackathon and you'd like some feedback, I'd be happy to review it and let you know what I think.
Awesome. Thank you, Sam.
All right. Bye, guys.
I think there is no more questions, so yeah, we can leave it there. Thanks, everyone. And thank you, Sam, for the workshop. It was very interesting.
All right. Thanks. Bye.
Bye bye.